Hi guys, this is Vimal, and I'm going to look at the cross for EOSUSD, and this is for the Bitcoin briefing. Now, this is the first time we're looking at it, so I'm going to give you the simple, straightforward analysis. I'm not going to go into too much detail. You see a channel here, very simple. You see a potential triangle, very similar to what we just looked at on the other cross that we just looked at, which is XLM-USD. And you'll notice that we have a contracting triangle here, very nice, very simple, and we have a decline. Now the decline, I'm making an assumption that we are close to some sort of extension, and here we go, 0.236 extension. So you can see that I've drawn it in front of you so that you can understand how I drew that extension. So this is potentially A, B, C pattern. Now, if this suggests that there is some sort of support coming in right now, then my thinking is that this low here, let me zoom in a little, it is critical that we maintain this low. And I would assume that we stay above this one, or which is around 1.773. If we can stay above 1.773, that'll give me a lot of encouragement. Now, what you see here is a potential expanding diagonal. I'm going to show that to you. But before that, this is a channel. You've broken out of that channel. You can see once we broke out, we tested it. It's what you call a back test. So far, successful, which is a good sign. Now, let me take this out. What I mean by an expanding diagonal potentially is something along the lines of this. Now, if we have 1, 2, 3, 4, and a 5 wave higher, then all I need to see is a corrective zigzag decline, something along the lines of this. Thank you for your patience. Something along the lines of this. If we can get something like that and we hold above 1.773, that'll give me a lot of encouragement to suggest that perhaps a low has been put for this entire decline that started all the way from $22 to $23 on the 29th of April. So this is a drastic decline that you've seen. And if you were going to take a Fibonacci retracement, well, you have seen basically you're looking at just below this particular retracement of 0.1. Now, what I'm going to show you right now is very simple. If we can hold this level, it means that this decline was a false breakdown, a bear trap, and that's very powerful to the opposite direction. I would hope that we can get above a certain moving average. Now, the moving average that I'm going to show you is just the 50-day moving average, and that is right there. Now, that's still some time, or still quite far away. So let's put the 20-day moving average, just to give you an idea. We've just taken it out, but you can see there have been false signals in the past, and I wouldn't use that particular moving average to give you some confirmation. So I'll stick with the 50-day. That would suggest, if we can get above that, that would suggest on a closing basis that perhaps there is a low. If you want to get something better than that, go with the 70-day. And I would assume yes. We've had maybe one or two closes above it. You want to make it even better, look at the 100-day moving average. And you can see how beautifully we resisted that moving average. So until you get above 4.67, you don't have confirmation that this decline is over. However, the risk to reward right now of initiating a position is quite enticing, considering that we've seen a channel retest, we've broken below, false breakdown, and we've moved back higher. I've shown you some stop losses, I've shown you some levels that we need to hold. I've given you an idea of potentially what could come. Wait for a pullback and then look to potentially pull the trigger. I will keep you updated. Thank you again for your time.